You're watching Beyond Markets. Welcome. I'm Esther, Awoniyi. Many thanks for joining us. On today's show, we'll discuss the top risks African businesses are concerned about this year. You can join the conversation with the hashtag Beyond Markets, and you can send tweets to my Twitter handle too at Esther O. Awoniyi. Now, the Allianz Risk Barometer is an annual corporate risk survey focused on large and small to mid-sized enterprises. Seelan Naidoo, Head of Property and Engineering at Allianz Global Corporate and Specialty Africa, joins me to share more insight from this survey. Seelan, thank you for taking the time out to join us today. Before we go into all the factors that came through from this survey, let's just start with you helping us understand the methodology used in this survey.
Thank you for the opportunity again, Esther, and good morning. So essentially the Allianz Group, as you know, we run a survey. This is our 8th annual survey. We basically talk to industry experts from around the world. We get a cross view of ideas in terms of key risks that are faced by largely major businesses around the world. We consolidate the input, and then we create basically a survey which we share with our clients and other industry players. Okay,
let's get right into it then. Let's start with Africa, the top 5 risks that came through based on the responses that you got from this survey. Let's start with market development. What are investors, or rather what are companies most concerned about in terms of market development?
I think, particularly when you look at companies and you look at investments coming into Africa, it's really about certainty, So when we talk about market developments, it's in terms of market fluctuations, volatility in markets, market stagnation. Typically, because we compete in a global environment, we basically have similar issues and concerns as companies elsewhere in the world.
Okay, what about political risk and violence? I know that, that's still an issue on the continent, but it comes second here. Tell us more about that.
I think political risk features now again prominently. Unfortunately, we've got a number of issues on the African continent, particularly when we're talking about war, terrorism, civil commotion. We have countries that have recently gone through elections. We can see some of the major issues that are emanating. Again, a lot of uncertainty being created, and it's obviously worrying to international investors.
Now for technology, and I know that this played big, this came through significantly in this survey, cyber incidents. Obviously, companies, especially companies here in Africa, also looking to be on the cusp of technological advancement, at least to keep up and not to play catch up as it were. But obviously that has come with its own risks, and I suppose that's why cyber risks incidences features prominently on both, from Africa to the world and in places like Nigeria also. But within the cyber risks itself, what are those factors that are the most concerning for companies?
I'm glad you raised cyber. Cyber is now almost on par with with the impact of business interruption type exposures, which, as you know, rates #1 in terms of the survey. With cyber risk, many companies have entrenched technology within their businesses, and with new technology within the businesses comes not only opportunities for business to grow, but it also brings new risks to companies. So we're concerned with data security breaches. We're talking about IT outages, and those kind of exposures that typically come from technical errors, mistakes by basically staff members within organizations. So it's a whole multitude of risks that have now emanated and which companies have to deal with basically going forward.
Any thoughts on how these companies plan to mitigate against this risk, perhaps through better risk management mechanisms and good insurance companies that have good coverage for instances like that?
So essentially, the traditional physical damage policies wouldn't have given any form of cyber cover whatsoever. So what companies have had to do now, there are products and solutions available for cyber insurance. But in order to get cyber insurance, you've got to go through a whole range of risk mitigation measures within the organizations. For example, we would have to test whether the technology, whether the systems and the controls that companies have in place, whether they are robust enough to withstand hacker attacks, for example, data breaches. So before we even get to an insurance company providing a solution for cyber, we would have to test the robustness of controls that companies have within the organization.
Okay. Now, still looking at the top 5 risks for Africa, what I see here from the survey is one that you termed new for the first time. That's new technologies coming in for the first time on this list. Tell us about that.
So we've seen rapidly within the insurance sector the evolution of technologies such as artificial intelligence. We've seen data science, for example, and we're seeing blockchain technology, for example, being utilized within the industry. So within these new technologies, like I said earlier, they basically enable companies to pursue more significant growth, but at the same time they bring more risk to organizations, and that's where we as an insurer, we not only provide insurance solutions, but basically we provide ideas and solutions around risk mitigation. We provide consultancy in terms of risk consultancy services. So we are able to help organizations and companies deal with a myriad of new risks that are being brought through the organizations by virtue of enabling technology.
Okay, speak to us about business interruption. That's also one major concern for companies. What are they most concerned about?
In the past, companies are pretty comfortable dealing with business interruption following, so companies basically are more equipped in dealing with the physical damage. You're easily able to quantify the extent of your physical damage. You then can determine what the costs are associated with it, and you can basically get physical damage dealt with in a relatively quick way. Business interruption, however, is a little bit more complex in that you need to understand the length of time that the company is going to be out of business by virtue of the interruption. You're going to need to understand the length of the interruption. You're going to need to understand what is the dependency on key suppliers and customers. Typically, for example, a company in Africa, when they suffer a major fire, they would need to import new plant and equipment from producers, say for example in Europe. These would involve normally long lead times. If you're talking about big ticket items, it could be up to 2 or 3 years in order to get replacement of key equipment and plant. So the business interruption exposure is not easily quantified up front. It requires a lot of methodology, it requires a lot of planning and understanding in terms of the true effect of the interruption loss suffered by a company. Now, even in the best cases with the most adequate business interruption coverage in place, companies never really recover the true economic loss that they suffer following a loss.
Now, let's talk about changes in legislation and regulation. What are companies most concerned about? We know that this is constantly changing, especially for countries that are in an election year and where perhaps there's opposition to the incumbent, or the incumbent is running for office for that position again. We know that that can be an issue, but tell us what you found out from this survey.
Look, the political situation and changes that come from political situation are inherent in most African countries. However, from a risk mitigation measure, for us it's more about sanctions that are being imposed across the country, protectionism. For example, a lot of insurance companies now, particularly the indigenous insurance companies in country, will tend to keep more of the risk, so less of the risk gets externalized outside of the African continent. Now, there are advantages and disadvantages to that. Obviously, we want to create capacity within the country, but when you have a major catastrophic event, you may find that the capacity within or the ability of the local insurance companies, they may suffer significantly because they may just not have the capital to pay some of these large losses. So, we've got to be very careful about protectionism, which is coming about. Also, we need certainty on the legislation that's applicable in a country. Where the legislation is changing constantly, it is difficult for us to take longer-term views in terms of the sustainability of companies and organizations trading in that country.
Now, Seelan, I'm curious, when you do this survey and you ask you ask respondents what they see as the top risks, and they come up with this list of top risks to them, do they also talk about how they're planning to mitigate against these risks and the specifics in terms of perhaps what they've done in the past or what they perhaps need to do that could be something new in the new year?
It's actually a very good question. So the survey itself basically deals with opinions from experts, right? So we had experts from something like 86 countries. We had something like more than 1,400 responses. So essentially they just deal with risks that their own organizations are facing. But we as an industry, we learn key lessons post major losses. So we are able to share with companies in terms of the true extent or the adequacy of risk management that should be in place, and the level of risk mitigation measures that they need to have in place, in order to deal with large losses, for example.
I'd like us to take a look at two countries, Nigeria and South Africa. Let's start with Nigeria and what came through in terms of what respondents put as a top 5 of what they are most concerned about in terms of risks. Now, I know we've talked about legislation, but that comes up as at the top of the list. 41% of the survey say changes in legislation and regulation, like trade wars and tariffs, came at the top of the list. But what came through for you in terms of this response and how it made it to the top of the table?
It's a very nice question. Basically, we're dealing with two of the largest economies on the African continent. I mean, give or take what the oil price is, we can debate which is the largest economy. But if you look at it in South Africa, it was about the impact of business interruption, including supply disruption. It was about cyber and the consequences of major cyber incidents. And it was about new legislation and regulation. Whereas in Nigeria, it was initially about market developments and the effects of changing legislation and regulation. So very different. And I guess it's based on the inherent characteristics prevailing within the country. South Africa is a very mature industry from an insurance perspective. We're rapidly gaining a lot of traction in the Nigerian market. So I guess it's a matter of time before we'll start seeing that the risk will probably be similar in the foreseeable future.
All right, Seelan, we'll take a quick break and we'll come back and pick up from where we left off. I've been speaking to Seelan Naidoo, Head of Property and Engineering at Allianz Global Corporate and Specialty Africa. Welcome back to Beyond Markets. If you're just joining us, Seelan Naidoo, Head of Property and Engineering at Allianz Global Corporate and Specialty Africa, is with me today, and we are discussing the risks African businesses are most concerned about this year. Seelan, thank you for your time so far. Let's continue from where we left off, looking at those risks that Nigerian businesses are most concerned about this year. There's theft. Also on the list is theft, fraud, and corruption. Now, obviously, these have been major issues for the country. This administration came on the back of fighting corruption, and that has been a major conversation. So what did respondents tell you? What came through in terms of why businesses are still very much concerned about corruption and fraud? I
think in the Nigerian context, the respondents who we interviewed, obviously, they would be talking about incidents that are critically facing their companies and corporations. So obviously, if something is relevant, if something has been happening frequently, they're going to talk about it. And so theft, fraud, for example, are topical within the Nigerian market. Whereas we do have similar issues in South Africa, it doesn't actually make the top 5 or 6 critical risks that South African CEOs and CFOs are alluding to. It doesn't mean that our exposure is any less. It's just that the focus within companies tend to be different based on the inherent characteristics prevailing in the market. And unfortunately, in the case of Nigeria, I guess it's a lot of legacy issues. In the case of South Africa, I guess it would come down to the adequacy of controls and measures that companies have in order to eradicate high frequency of theft, fraud, etc. But I'm very excited with the Nigerian sector because we see the evolution, we see the robustness of controls being put in place, and I think in the next 3 to 5 years, we could probably, largely address these kind of exposures that are being faced by big Nigerian companies.
Okay, now I'm looking at loss of reputation and brand value. That's a new risk that's made its way to the list of top risks. What can you tell us about this new entry and what came through?
I think another critical component as well. In the past, the risks are really associated around physical damage that companies should sustain. However, we've seen in the case of cyber incidents, for example, there's been large privacy scandals, there's been large data breaches or security breaches by large organizations. So it's becoming, whilst the companies deal with the consequences following these incidents, these companies are usually high profile, they're listed on stock exchanges, so they lose. It's not just the physical damage and the interruption loss that they would suffer, they would suffer significantly in terms of reputational damage that would be caused to largely known brands. So that creates a whole new domain and expertise that needs to be created, because when you have these incidents, what's critical is that the experts that you have or the internal capacity that you have to deal with and mitigate loss of brand value or reputational issues that may be more longer term for the company or organization. Interestingly,
at the bottom of this list for top risks in Nigeria is power blackouts. I mean, I was thinking that it would be somewhere at the top or perhaps at the middle, but it's, just 7% of the respondents said that blackouts were a major risk to their business. I mean, did you find this a little surprising yourself? I mean, I know that many of the companies in Nigeria do provide their own power, but obviously there's always that hope that power would increase with each coming year. But let me just let you answer that.
Again, it's interesting that you picked up that particular item. So both South Africa and Nigeria have huge challenges in terms of the adequacy of power supply. We're very different in that South Africa basically has a central grid, basically, which then deploys power, to various parts of the country. In Nigeria, you have a situation where it's sort of a disintegrated. You have different grids, but clearly, both countries still have huge constraints on adequate power supply. Now, you might ask, well, what's the relevance of power supply? Well, power supply is an integral part in terms of driving the economy of the country. A lot of businesses tend to take a step back, or it's a significant deterrent to economic growth if you do not have adequate power supply within a country.
Let's quickly move on to South Africa. I mean, for the list of risks for South African businesses are pretty much similar to what we have with the Nigerian business scenario. But I see two new entrants on the list from South Africa: political risk and violence. What can you tell us about that one? And shortage of skilled workforce. That's also a new risk on the list.
Esther, I'm very impressed that you've actually read the report in detail. So yeah, I must applaud you. So coming to political risk, obviously immediately there's an election coming up in the country, increased concerns, you have investor concerns. So political risk, I guess, inherent again based on what's prevailing in the country. So we've seen the situation in the DR Congo, and we've seen situations in other parts of the African continent. So I'm not surprised seeing political risk. It's eventually on the top risk facing South African companies, but it's a concern being echoed by CFOs and CEOs within these organizations. And obviously they will now look at measures and controls to address any fallout arising from political uncertainty in the country. With regards to the skilled or the lack of skilled laborers within the country, South Africa has had an exodus in terms of skilled labor, possibly or leaving the country over the last few years. But we are seriously addressing it. There are companies that are putting in robust plans. We are looking to fast-track graduates within the system. So we are creating the environment to improve the capacity in terms of a skilled workforce.
For all these companies, all the respondents representing all these companies, over 2,000 of them, would you say that overall, I know that these are just a few of some of the, top risks, but would you say that overall they're bullish about their individual economies, as South African and the Nigerian economy, or is it hard to tell, or would you say it's mixed?
I think it's a mixed at this stage because the Nigerian economy is pretty much driven based on what the oil price is prevailing at any one time, although the country is looking to diversify to some extent. South Africa is very much a commodity-driven country, although we have diversified a lot more into financial services. Tourism is a big part of the economy as well. The responses from these experts are based on what their individual companies are facing. So from the respondents on African countries, it'll be pretty much what's prevailing in the country at this stage. So I don't think the correlation is immediately there, but it gives food for thought. A lot of the observations that come from experts, it allows management within individual companies to reassess the risk that they have nominated as the top risk facing the organization. And they may find that they've overlooked certain risks. They may make amendments to the top risk facing their own companies. So it's an idea to disseminate information based on a wide spectrum of views being produced by or within a wide range of industries and companies.
Let's move away from Africa now, from the continent. Let's go global now. Now, the World Bank, the International Monetary Fund, are projecting a 3% global economic growth. And now that's quite soft. Obviously, we need better numbers. And they cited a number of risks, from the US to the UK, and that trade spat between the US and China. But let me hear you just talk to us about some of those key risks across the major developed economies that would be the main risks for businesses across the globe in 2019.
Again, it's a great question, and also it's a difficult question to answer if you think about it. I mean, the trade wars, for example, between the US and China have nothing to do with Africa, but because we compete in a global economy, and because a lot of us are emerging economies, we immediately get impacted by something that's totally out of our control. Brexit is another topic right now. The UK tends to be one of the bigger trading partners for many African countries. So whichever way we look at it, there are going to be consequences for the African countries, some to a larger extent. I think on whatever the growth rates are being predicted, I mean, we've seen certain African countries deliver decent GDP growth rates over the last few years. We've seen other countries which are barely making, just above 1% in terms of GDP growth rate. So it's the growth rates, I guess, it depends on the geographic in which you're trading in. Are you highly dependent on oil? Are you highly dependent on commodities? Is your economy more diversified than others? So there's a whole magnitude of factors that impact growth rates within the African countries.
Now, looking at this year's survey and taking your mind back to the last two surveys, what would you say are perhaps common denominators in terms of risks for businesses and how a global matrix, what's going on the global front, from oil prices to trade wars to just overall prospects for economic growth, how they've changed across, from the outcome of this survey in the last three surveys?
Certain parts are similar, obviously, right? So the traditional, the catastrophic type losses, the fire and explosion, the impact of business interruption, that's pretty much standard, and it keeps, it may change on the list, but it's pretty much carries over from year to year. But if you look at the new trends coming through, aspects like new technology, it's getting a lot of emphasis. Cyber is suddenly climbed to number 2 in terms of a risk which major businesses now fear, especially a business interruption loss following a cyber incident. So we are starting to see, and then obviously things like legislation and new regulation are becoming more topical because the amount of activity that happens within the African context is significant, but also worldwide. But I think, Esther, it also refers to the view that we compete in a global economy. So and because our companies are so interconnected basically worldwide, for example, we're depending on the same suppliers and customers, and should there be eventualities, we get impacted equally. So I think we are starting to see the signs, and also, from an insurance evolution, we've moved from companies being concerned about physical damage to now dealing with a lot more intangibles. And intangibles require a lot more mindset, thinking. The methodology is different in terms of how you quantify losses arising from intangible type exposures. So while some of it is the same, we're seeing that there's a move towards other trends that are coming more prevalent as we go forward.
Thank you so much for helping us unpack that survey. We appreciate your time today. I've been speaking to Seelan Naidoo, Head of Property and Engineering at Allianz Global Corporate and Specialty Africa, looking at the top risks for businesses in 2019. Well, that's our show for today. Thank you so much for being a part of it. Remember, you can watch all previous episodes of the show on our website at cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets, and you can follow my Twitter handle too at Esther Awoniyi. From myself and the team, to have a great day.